Welcome back to the channel, guys. I'm your host Buckning, and today we're giving you a end of the week update, but also we are going to answer a question from a subscriber, which is a great question, and that is the question of how are dividends paid out on Wealthsimple Trade. But she also has another question. But if you're new to the channel, welcome. This is where we deposit $100 a week into a tax-free savings account to build a dividend stock portfolio right in front of your eyes. If you're not new, welcome back. And so we'll just get right into it, guys. We did add a new position into the portfolio today. There was an error. There we go. Not one day. Today we ended the portfolio at $1,387.01. We are up $4.77 for the day, up 0.35%. For the week, we are up $40.20, up 2.98%. For the month, we are up $134.95, up 10.78%. For 3 months, we are up $167.01, up 13.69%, which will be same for the 1 year and same for all. So in the portfolio today, we have BMO closed out at $93.35. We own 5 shares. Total return is $60.15. This holds 34.81%. Bank of Nova Scotia closed that at $63.48. We own 7 shares. Total return is $62.31 and holds 33.14% of the portfolio. Manulife Financial Corporation closed that at $21.50. We own 17 shares, down $4.25 today, but our total return is still up $38.06. It owns 27.26% of the portfolio. Today's new position bought today is Loblaws, ticker symbol L, .to in Canada. Closed out at $64.26, down 2 cents today, down 0.03%. We own 1 share. Today's return is 19 cents. Total return is 19 cents. And our average price, so the price we bought it at, is $64.07 today. That is the newest position. So what we'll do is we will go ahead and go to trackyourdividends.com. I know one of the commenters down below asked for a walkthrough on Track Your Dividends, in which we will do in a future video for sure. So stay tuned for that. So we are going to add a new holding, ticker symbol L.to. Yes, I still have to look at my keyboard to type. 1 share and a cost basis of, sorry, I'm just gonna look it up here, $64.07. Boom, add that, done. So now the portfolio value on trackyourdividends.com is $1,341. Dividend yield, if you're to build this portfolio today, before end of the day, your dividend yield would be around 4.97%. And the yield on cost for this portfolio is 5.65%. So our yield is much higher because we were able to buy the positions at a lower price. That is what yield on cost is. So our annual income now is $67 instead of $65 because of Loblaws, which gives us $1.26 annual income. So yeah, so that's pretty much it for that one. So we'll just go back and head on back to the portfolio here. And just so you are aware, Loblaws is not, for me, in my opinion, is not a stock I'm looking for growth. It's more of a defensive stock that still pays a pretty nice dividend, I think, for where it's at. And if you don't know what Loblaws is, it's a parent company that owns a bunch of grocery chains like Superstore, TNT, No Frills, Independent Grocers in Canada, and they also own Shoppers Drug Mart and a few other things as well. So yeah, that is the newest position. I'll just leave it up there just for new position sake purposes. But we got a question that we're going to answer from Teresa Waite, new subscriber, new investor. and a great question. And so her question is, I have a question. Does it matter which account type we use to buy stocks? I'm going to answer that question right now. And I'd probably go in depth on what accounts, in my opinion, I would use in a specific order based on what we're trying to achieve in a different video. But Teresa, congratulations on being a new investor. Super proud of you for taking a step, and definitely it takes courage to tell people that you're a new investor. And so anybody who is commenting, please go down to her comment, leave a like, and just congratulate her, because I respect that a ton. And so what account types should we use to buy stocks? If you are in Canada and you just turned 18, or you have just started investing, in my opinion, remember, this is my opinion, this is not professional advice. If you want professional advice, go seek it with an investment advisor, financial advisor, because I'm not one. I'm definitely not your financial advisor. And if it has anything to do with taxes, go seek an accountant. Like, that's not what I do. This is all my opinion. And so to answer the question, in my opinion, if you are in Canada, you should open a tax-free savings account first. And the reason I say that is because dividends, capital appreciation, any kind of profits, if they are not in a tax-free savings account, let's say they're in the personal Wealthsimple Trade account, which is also known as a non-registered account, is taxable. Now, don't quote me on it. Like I said, go seek out a professional, like a tax professional, and get, a concrete answer. But typically, it is taxable. And so that's why I recommend to open a tax-free savings account, because any profits that happen within this tax-free savings account shelter is tax-free. So if, let's say, you had $1,000 in an investment and it turned into $10,000, that money is not taxable, because it's in a tax-free savings account. Dividends, if it is a U.S. dividend, please be aware, and it's in your tax-free savings account. So let's say Apple, for example, the United States government will withhold, I do believe it's 15% of the dividend, for tax purposes. However, Canadian dividends, they do not tax your dividend in the tax-free savings account. In the personal account, it is taxable. And so I just want to make that very clear. So, but again, please seek out an accountant on that, or a financial advisor, because I'm not any of those, for professional advice. This is all my opinion. And so my recommendation is, Teresa, open a tax-free savings account. The reason I say that is because if you haven't contributed yet and you're just starting out investing, it's probably best that you don't pay taxes on these dividends or any kind of capital appreciation that you have. And so that's my recommendation if you haven't maxed out your contributions for that. And so, and there are limits to it. I think every year it's around, I know when it first started it was like $5,000. Now it's like $6,500 per year. But I will talk about that in another video. So hopefully that answers your first part. Second part of the question, and how are dividends paid out on Wealthsimple Trade? I'm going to talk about it in general, and I will talk about how it's paid out in Wealthsimple Trade. And she just states that she uses her personal account. That's totally up to you, but I recommend a tax-free savings account. And she's very new to this. So any viewers, anybody who goes down and reads the comments, please go leave her a like on that comment, because that is admirable and respectable that you can say that you're a new investor. A lot of dudes, I know a lot of dudes, they for some reason they're new to investing, but they don't say they're new to investing, and they make mistakes. I was one of those guys, so I know. And I made the mistakes, so you don't have to. And I'll share with you my experiences in a later time. But dividends, there are 4 dates and 4 terms that you want to look for in a stock and dividend, and how it works. So the yield on any stock that you look up, whether it's Loblaws, Bank of Nova Scotia, AT&T, Apple, the term you want to look for is yield. And I'll just show you here. So I don't know if you can see that, But same thing on the screen. Actually, it's on the screen. What am I doing? The yield is talking about the dividend. So there's a set amount that the company will pay out to shareholders when you own a stock in that company. And it's usually a percentage because that percentage always changes. And the reason it always changes is because the stock prices change. But there is always typically a set amount that they pay per share. Okay. And so the dividend is paid out partially from the company's earnings, which the board or the company decides to pay out to its shareholders as a little thank you, or just it's just what they do. And so the first part, the term that you want to understand, is called the declaration date. Every company has a declaration date that pays out a dividend, and that is the date typically that they announce that they are paying a dividend to the shareholders. So that's the first term. That's a very simple term. Doesn't really play a factor, but it's just nice to know for records. The next date you want to know is the EX dividend date. This is the date. Typically, it'll give a specific date on when the deadline is for you to own that stock in order to qualify for the dividend. So the X dividend date. So let's say it lands on the 5th of December. Let's call it the 5th of December. And we're buying a position in Manulife Financial Corporation. Actually, let's use Manulife Financial Corporation as an example. So I have that stock, and this is why I switched buying Manulife to Loblaws in the month of November. Manulife has an ex-dividend date of November 20th, which is actually today. Yes, today, recording Friday. The ex-dividend date is when you have to own that stock, the deadline to own that stock. So typically it's yesterday. If you own the stock yesterday, then you will receive a dividend because you owned it before the 20th of November, and you will get paid out at whatever date that is. Okay, so that's the ex-dividend date. The ex-dividend date is the deadline for you to own that stock or position in order to qualify to get paid a dividend. Third term is your record date. Okay, record date typically will fall in 1 day after the ex-dividend date or 2 days after, and that is when you need to be on record with the company that you own that stock, or broker that you own that stock. So because I own Manulife before today, because I didn't buy any new positions, I will be on record to receive a dividend payment. So that date is also somewhat important. That's the only difference. But I would go off the ex-dividend date typically to own that position. If you buy on the ex-dividend date, you're not guaranteed that dividend because people sometimes sell on the ex-dividend date, and that the person that previously owned it will receive that dividend, even though they don't own the position anymore, because companies honor that. And correct me if I'm wrong, obviously. So, and then there's the payment date. So as long as you own the stock on or before the ex-dividend date, you will receive a dividend on the payable dividend date. Okay. And the way that dividends are paid out on Wealthsimple Trade, from what I've experienced, I know for my other portfolio, my dividends get paid out typically a day after, the payment date, or the same day, but usually it's a day after, unless it lands on like a Friday. I won't get it till like Monday or Tuesday because it's the weekend, so I won't get it till the following Monday or Tuesday, which is fine. But the way the companies pay out their dividends is they send, wherever the shares are of the company, they send the funds to that broker or whatever, and then it's up to the broker to divvy it up into divvy it up to all the shareholders. Sorry, and that's typically how it works. I know with Wealthsimple Trade, I got a notification stating that I got a dividend for Bank of Nova Scotia. I got a notification on my phone, but it was typically a day after, and it just automatically goes into your account. So where it'll actually go is actually where it says, if you see on the screen there, it says available to trade, it'll actually just go into that account. That is quote unquote called your cash account. That is where just cash is being held to make any trades. So that's where it will go. If you go into your account history, activity, sorry, and you can filter it. If you go to, there's even a spot here where it says dividends, and you just hit done. It'll filter the dividends. So on October 28th, you can see I got $6.30. So $6.30 into my for Bank of Nova Scotia into your TFSA. So they put it directly into the account in which it is being held. So if it's being held in your personal or non-registered account, that's where it'll go. And then you can do what you want with it. But be aware, just so you know, United States stocks, so Apple stocks, AT&T stocks, whatever stock you own in the US that pays dividend will automatically get taxed. You don't have to do anything. It will automatically get taxed. I know in my other portfolio, it does say withholding tax, US withholding tax, and they take like the percentage right off the dividend. So, but be aware of that. It's not everything is tax free. Okay, any American stocks held in your tax-free savings account or any account does get a withholding tax. So please be aware of that. But that is how dividends work, and then you just get paid on it on a monthly basis. So let's say you bought, for example, let's say you bought a stock 3 months ago, or not even 3 months ago, you bought it literally 2 months ago and you didn't receive a dividend payment, or a month ago and you didn't receive a dividend payment. Most likely you bought it after the ex-dividend date, or you missed a certain deadline, and that's probably why you didn't receive it, but you will receive it the next quarter, because dividends are typically paid out on a quarterly basis, a monthly basis, or a yearly basis, depending on the company. But most commonly, it is a quarterly basis. So that's a lot of information to take in. But that's why we keep educating. So hopefully that is clear, Teresa, and hopefully it answers your question. Congratulations on taking up something new and learning to invest, because it's probably one of the best lessons I think you can receive when trying to build, a lifestyle, income, learning to invest. It's just fun. And so congratulations on that. And so, yeah, again, guys, that's it for the video. Hopefully you did enjoy. Hopefully there was value added. And again, I'm not a financial advisor. I'm definitely not your financial advisor. And please seek out advice, because this is all my opinion. And I do my best to make sure that I make that very clear in every video. But this is the channel where we build a dividend portfolio right in front of your eyes and educate you. And so we've hit, last look, we were at 121 subscribers. It's awesome. I love you all. Thank you for showing your support, leaving a like, subscribing. It really helps the channel grow, and it doesn't go unnoticed. It doesn't go unappreciated. And so that's pretty much it. This video is probably my longest video, but dividends are something to understand. It's a different type of investing for sure, and not all stocks pay a dividend. So just so you're aware. But other than that, the video might have been up and everywhere, but if you've noticed, I do this in one shot. I don't typically cut scenes or anything. I want the raw footage for you guys to show that I'm a regular dude, that I don't cut out the weird stuff, right? So hopefully we'll see you guys in the next video. Enjoy your weekend, and yeah, we'll see you on Tuesday when we put in another $100. So thanks again, and thanks for watching, and we'll see you in the next one. Bye.